Good afternoon and welcome to this webinar on NetSuite OneWorld multi-subsidiary consolidation and reporting. My name is Tom Willett and I'll be doing the webinar with you today. Let's start by going over some PowerPoint slides. So firstly we'll just talk through the agenda. So this is just the different things we'll be covering. So we'll look at OneWorld subsidiary structure inside of NetSuite. We'll then move on to look at the consolidated exchange rates and currency exchange rates in NetSuite and what the differences between these two are. We'll then look at some consolidated reporting with real-time consolidation, and then we'll finish it off by talking about intercompany eliminations. So, OneWorld subsidiary structure. What is this in NetSuite? So, NetSuite OneWorld is the supporting of global multi-subsidiary organizations. And the idea is with OneWorld, an organization can use a single NetSuite account to manage records and transactions for multiple legal entities. And each of these subsidiaries will be treated as a distinct legal entity for taxation and regulation purposes. And each of these will be associated with a specific nexus and specific base currency. And we'll come and see this shortly inside of NetSuite. Each of these subsidiaries can represent a separate company within your global organization. Subsidiaries can be international or domestic, but when you create a subsidiary record inside of NetSuite, the country you define for its address determines the addition and tax nexuses associated with that subsidiary. So, for example, if it's a UK subsidiary, it will be determined that the NetSuite addition will be UK and be based off UK tax nexuses. Inside NetSuite, it is possible to create up to 74 subsidiary records in addition to the root subsidiary. In addition to this, you can create elimination subsidiaries which don't count towards the 74 or 75 subsidiaries within NetSuite. So I'm going to jump into NetSuite now. So this is my NetSuite homepage, and one thing you'll be able to see straight away is I've got something called the Subsidiary Navigator. Now I'll jump back to this in a minute, but you can see this is related to some of the stuff we talked to. So I'll start by going into my subsidiary setup. So if you have a OneWorld account in NetSuite, you'll have a new options under company called subsidiaries. If I go to here, it will then list through all the subsidiaries that I've got set up within NetSuite. So let's take a look at a couple of them. And as you can see here, we've also got hierarchy. So the parent is this top level subsidiary here called Nelson Holdings. Below that, we've got a group called Americas. And under there, we've got different sets of subsidiaries that roll up into the Americas. So let's look at the Nelson Holdings subsidiaries. So if I go into view mode here, this will give me some information related to the subsidiary. So first thing you can notice here is for each subsidiary you're able to set a logo. So if each individual company or subsidiary has different logos that you want to be available to the forms or to the pages, these can be identified here. You can also set the website related to the subsidiary. And as you can see here, there's the information. So here we've defined the address. We've said the country is UK. And then this sets the edition it's related to, which is this UK edition here. In a minute, we'll have a look at the subsidiary in a different country, and we'll see how the edition changes based upon the country you are. You can then set the base currency of this subsidiary. So we're in the UK, so this is GBP. And you will then also have the edition, as I already said, the UK edition. One thing also worth showing here is the Nexuses tab. For each of this, we can add nexuses. So this is related to the taxes that are associated to these countries. So for example here, for this company we're saying we need to use the UK tax nexuses and also the United States. And obviously the US has different states taxes, so you're able to add different nexuses depending on the different US states. So here we've just got one of them here. So if I now go back to the list of my subsidiaries, I can view, let's go and view the Canadian subsidiary here. So if I go into edit mode, you'll be able to see what you're able to change. So here we go, my Canada subsidiary. And here I've set it as the country is Canada. And this here is defaulted addition to CA for Canada. So once you've set up a subsidiary and saved it, there's certain things you then can't go back and change. So for example, I can change the name of the subsidiary from Canada, but I can't change the country it's associated to. I can't change the edition, which is directly driven off the country, and I can't change the base currency, which is CAD, Canadian dollars. The final thing I can't change is If it's a subsidiary of another entity within or subsidiary inside of NetSuite, I can't change that. For example, here Canada is set up to be a subsidiary of Nelson Holdings Americas, which you can see here, that's Nelson Holdings Americas. So I can't change within my hierarchy where Canada is related to. So actually that is something, once you've set up and saved it, your hierarchy is then defined within NetSuite. You can't change it. So let's go and add a new subsidiary and see some of the options available to us. So as you can see here, the addition is always grayed out because that's something we can't change. That's just something that's driven off by the country. So if I was just to change a few different countries, for example, if I was to set the United States, excuse me, sorry, we'd be able to see that the addition changes to the US. Or if I was to go to Spain, for example, the addition goes to XX. So certain countries will have their specific addition, for example, US, UK, Canada, but apart from that, XX will be most other international countries. One thing worth noting is the currency isn't driven off this. We can choose whatever currency we want to be the base currency for the subsidiary. So for example here, obviously Spain is set to XX edition, but the currency exchange is US dollars, and then I can select here from whatever currency it might be. So for example, euros. Okay, so that's what subsidiary setup looks like if I was to create a new subsidiary or view existing subsidiaries inside NetSuite OneWorld. So what I'm doing now is go back to the home page. Oh, yeah, just going to leave the page. And I'm going to talk about this subsidiary navigator. So this subsidiary navigator is actually a bundle that's add-on to NetSuite and is available for anyone to install that has the ability to install bundles. So for example, if I just go under customization suite bundle, if I just go to search and install bundles, then one of the bundles available is called Subsidiary Navigator. So let's give that a quick search. There we go. And here is that Subsidiary Navigator bundle, and I would be available to install it if I wanted to install it. And what it enables us to do is from the home page, and this obviously depends on access. If you only have access to one subsidiary, you won't be able to have the ability to do what I'm about to show. But it's, for example, if I was a group CFO and I wanted to see easily how all my different subsidiaries were performing, it gives me the ability to do this. So by default, on this home page, you can see here I've got some KPIs, I've got an AR aging report. Everything I'm looking at is Nelson Holdings Group data. But through the navigator, I can see just specific subsidiaries. So for example, I can select here just on Americas, and all my data on this page updates to just the Americas subsidiary. So that includes the Americas subsidiary, and it's the children of those are Canada, US East, and US West. And I can do it for anywhere. I can do it for group, I can do it for specific ones, for just Canada, for example. And the great thing about NetSuite is that then I can then draw through specifically into this data, so I can see that go directly then through my income statement. I'm looking at just my income statement just for Canada because that is the subsidiary that was selected on my subsidiary navigator. That was the P&L, the income statement report, and we'll look at that shortly as well. But the subsidiary navigator is very useful. For example, if you were a group CFO and you wanted to easily be able to compare different sets of data for your subsidiaries as a group or as certain sections, so the Americas region or, for example, European region, and NetSuite automatically refreshes the data so it just shows you that region. So let's jump back to a PowerPoint. So next thing I'm going to talk about are consolidated exchange rates and currency exchange rates. So I'm going to start by talking about consolidated exchange rates. So if you've got subsidiaries that have different base currencies, so we saw before in NetSuite when we set up a subsidiary, we can set the base currency. If we have multiple subsidiaries with different base currencies, then we'll need to maintain a table of consolidated exchange rates. And this is used to ensure that for consolidation purposes, currency amounts properly roll up from the child to parent subsidiaries. So how it's calculated is the consolidated exchange rates for each period will be based on the currency exchange rates effective at the end of that period and on rates used for transactions posted during the period. So these need to be updated at the consolidated exchange rate at the end of each accounting period as part of the period close task that you perform within NetSuite. And these consolidated rates are created when the associated subsidiary and counting period are closed. So if I just move on to the next slide, here we'll describe the differences between the consolidated exchange rates in NetSuite and the currency exchange rates in NetSuite. So if you don't have NetSuite OneWorld and you only have one subsidiary, all you have is currency exchange rates. So currency exchange rates are applied to transactions only, and they are set as of an effective date. So in a minute we'll go into NetSuite and we'll see where we can set this. So we can have daily exchange rates, we can have weekly exchange rate. But each of these exchange rates will have a date that this is valid from, and then that will be valid until a new rate is entered from a new date. And the currency exchange rates, they translate between the base currency and one foreign currency. So for example, if I have a subsidiary that is in GBP, that's the base currency of the subsidiary, but I enter an invoice in euros, then it will be the currency exchange rate that converts my data from my euros into my base currency of UK. So these can be added by manually adding new rows with new effective dates, or we have something in NetSuite called the currency exchange rate integration, which can automatically update your exchange rates daily. And I'll show you where this can be set shortly inside NetSuite. The opposite, or the comparison to this, is the consolidated exchange rates. So these are used for consolidated reports. These are set on the accounting period rather than as an effective date, and they will be used to translate between base currencies for one subsidiary to another. And these can be these are updated by manual editing, or they can be auto-calculate the roles. So I'll show you that shortly inside NetSuite what that is. Excuse me, sorry. So I'll jump back into NetSuite, and I'll start by showing the currency exchange rates and where these are controlled. So under lists, I've got accounting, and I've got my currency exchange rates. So these are the exchange rates that apply on each transaction. So these will be if so for example, I used before a UK subsidiary, but I enter a sales order or an invoice purchase order in euros, the exchange rate between the euros and GBP will be defined in these currency exchange rates. So what I've got here is base currency and source currency, and here I've got the exchange rate, and here's this effective date I was referring to. So I can show you what I mean. So if I go to transaction sales and enter an order, I can select one of my customers. So I'm going to select the customer I've got set up here. So by default, this is a customer that's related to my UK subsidiary, and the default currency for this is GBP. However, I can also transact with this customer in euros. So if I select euros, then I can see my exchange rate has changed to 0.8964. Now this exchange rate is picked up from that table I was looking at before. So if I go back to the list accounting currency exchange rates, I'll just open that in a new tab. And if I go to my source currency of euros to GBP, I can see here that is that 0.8964 is the default exchange rate that will then be used on this order. And this is going to be used because the effective date is set. Anything from the 9th of August 2015, use this as my exchange rate between euros and GBP. But it's worth noting on an order or any sort of transaction, you can overwrite this exchange rate and you have the ability to change it. So I could put in a different exchange rate if for example, for this order I wanted to use something different. Now here, because I've got my magnet customer is set up within the UK subsidiary, I've said to it, it can be used in GBP and euros. And you can, as long as you have multiple currencies set up, you can assign different currencies to each customer. So if I find my magnet customer, so it's using the global search at the top to find them. And then under the financial tab, here you've got the option of adding multiple currencies. So for example, if I add in my customer, at the moment I've got it set up that I can transact with them in GBP and euros. But any currencies I've got set up in the system, I can add to that. then when I was to create a new sales order against them, I'd be able to select the other currencies. So for example, I could use Canadian dollars. For each customer, I have to set a primary currency. So in this case, it was GBP, and that was the currency I defaulted to when I started creating my sales order, and I selected my customer as Magna. And then the currencies that are available to you to select for a customer will be set up depending on the currencies you have set up in your system. So again, if I go to list accounting currencies, then it will be here. I'll be able to add new exchange rates, and you can see these are all the currencies that are available onto the currencies available to me for a transaction. As I mentioned before, you have the ability to have the exchange rates being updated daily. This can be controlled if I go to Setup, Accounting, and Accounting Preferences. Just find that. I have an option for exchange rate integration. So from here, if I select the rate provider, I can have my daily exchange rates coming into my NetSuite account, and you have two providers you can select from, and you can select either Thomson Reuters or X-Knight. Excuse me, sorry. Okay, so that's currency exchange rates. Now let's have a look at consolidated exchange rates. So they're controlled in a different place. So again, if I go to Setup and Accounting, I can have my, list and accounting. I've got my consolidated exchange rates here. So these consolidated exchange rates, let me just select. Let's just change my settings. Okay, so here I can see all my consolidated exchange rates. So where these exchange rates are going to be used are, if I'm looking, and then shortly we'll see an income statement report that will use that this will be applied to. But let's say we've got a top-level company in the UK, and one of the child subsidiaries in euros as the base currency. Then when I'm reporting on the top-level company, which is in GBP, the euros conversion to GBP will be based off these consolidated exchange rates that are controlled here. Now, for each from subsidiary and to subsidiary, you have three options. You can set them as current, average, and historical. And as I said before, these either can be calculated as part of the month-end process, or they can actually be manually edited. So, for example, you've got this option here. Oops, just reset it there, but you can actually edit these exchange rates through this page. Okay, so the three different options here. So we've got current, which also can be referred to as the ending rate. This rate is based on the currency exchange rate that is effective at the end of the reported upon period. So this would be most used for most asset and liability accounts in the balance sheet. So that's your current rate I've got here. My average rate is calculated from a weighted average of the exchange rates for transactions applied during the period to accounts that are set up with the general rate type of average. This rate will be used to translate accounts basically for income statement accounts. That'll be average rate, and historical is used to calculate. Is calculated from weighted average of the exchange rates for transactions applied during a period to accounts that have a general type of historical. And this is generally used for equity accounts or owners' investments in the balance sheet. So let's then jump to the income statement report, and we can see where these consolidated exchange rates will be used. So I've got one set up under my shortcuts. So let's just have a look at the income statement report. So as you can see before, it's defaulted to Belgium. Let's just make sure on the home page I'm looking at all my subsidiaries. There we go. So now looking at all subsidiaries, so I can go to my shortcut, go back to my income statement. Good. So this is my income statement. Down the bottom you can see the periods that I'm looking at. So I'm looking at from Jan 2015 to September 2015. And my subsidiary context is the Americas Consolidated. I'm going to change this to November, so I can look for the start of this year to the current period. And what I'm actually going to do is change it to the very top level, which is Nelson Holdings Consolidated. And then I just hit refresh. So what I'm seeing is my income statement for every subsidiary set up in my system, consolidated together to give me the total to give the total value. Now, because I'm looking at Nelson Holdings, which is the very top level, that base currency of that subsidiary is UK. So everything I'm seeing is in UK. So now I'm going to change it to just look at one of my subsidiaries. So if I change it to Canada and refresh the period, I'm now looking at my Canada subsidiary. What NetSuite does is, because I'm just looking at the one subsidiary, the base currency for Canada is Canadian dollars, so everything's now displaying in Canadian dollars. So for the same, let's just look at one period. So for example, let's just look at January 15 to January 15. Refresh it. Bad period to pick. Let's try April. Okay, so this is just my Canada subsidiary for April, and we can see his net income of 159,000 Canadian dollars. Now that 159,000 Canadian dollars, if I then look at the Nelson Holdings consolidated, that will be included in my net profit or loss of £2.1 million, but the rate that will convert it from the 159,000 Canadian dollars to here will be the consolidated exchange rates that we previously saw that's set up between Canada, the Canadian subsidiary, and Nelson Holdings consolidated subsidiary, rather than the individual currency exchange rates that are used on transactions. Let's change the period back. We'll look at the whole period again. We'll look from January to November. And what we'll do is we're going to change the P&L or the income statement to now look at specific customers. So let's look at Magnet. Set up here. Got a lot of leads set up in this company. So let's go to Magnet. Okay, and now refresh my income statement. So now it's just going to produce an income statement just for this one company, Magnet. So you can see here I've got revenue for the period of £27,000. If I click on this value, it will drill down into the detailed income statement. And then what I can actually do is then you can see that the value is made up onto two invoices. I can drill into the specific invoice here for £8,964. And actually, once I've drilled into it, you can see that this was actually an invoice that was raised in euros, and the total amount here is actually, if I go to the GL impact of this, it will show it up, that is actually in, sorry, that's showing it in pounds as well, but you can see on the invoice it's actually in euros, but on the income statement detailed report, you can see the value in pounds. And that will be converted using the currency exchange rates, because that's a transactional record that's been used. So it uses the currency exchange rates, not the consolidated exchange rates. Let's jump back to, I'm going to go back into view all customers for the same period and refresh it. I'm going to go back to my summary income statement report. Sorry, let's just jump back to all customers. Okay. What I also can do on a report is change my column context. So at the moment I'm just looking at one column for total. I can change this to actually have my subsidiaries as a hierarchy in my income statement. And now what I'm seeing is that I have all of these, all my individual subsidiaries have their individual value. Because I'm looking at the subsidiary context of the total group Nelson Holdings, everything's showing me in pounds, because I am looking at it in the context of a UK-based company that's using GBP. And you can see now my revenue account of 13.4 million is split into the pounds for each of the different subsidiaries that have any value for these periods. From this, so let's just take this one. I can see, and I'm looking at Canada. Well, I'm looking at America's consolidated, so I can see the total America's consolidated amount here, this column here. If I change my subsidiary context to America's consolidated, it will show me the same values for there, but now it's going to change it back into US dollars, because the America's consolidated group sorry, the Americas subsidiary is as a base currency of US dollars instead of GBP. So one other thing I want to show you can do with income statement reports as well, or any reports for that matter. I'm just going to refresh it to go back to all periods, and just have one total column for the output. Is you can customize a report as you would in any report, and you can actually add in a column for what is the foreign currency. So at the moment, obviously, everything's just in the base currency. So if I go to customize this report and add a column called foreign currency, so it's adding my columns, and under financial I have one for amount foreign currency. So if I add that field, if I now click on preview, it will now actually show what those values were in the foreign currency. So what we could actually do is, if this is obviously looking at everything again, if we go back to our specific customer and we jump down to Magnet and refresh it, we'll see that one. Actually, let's go into the detail of it. We can see the two transactions, and we can see that. Sorry, I've lost the foreign currency amount here, but what we'll be able to see is then the actual foreign currency option for the 8964 was 10,000 euros. Let's jump back up here. You'll be able to see the difference. So the GBP amount here and the foreign currency amount of euros is there. Okay. So the final thing I want to talk about is intercompany eliminations. So what NetSuite does with intercompany eliminations is intercompany sales and billing transaction lines will be identified by default in NetSuite based on the intercompany account which the line is associated with. For intercompany inventory transfers and drop shipments, these will also be identified by default based upon the intercompany account associated with that line on the related purchase order, sales order. Whereas journal lines that require elimination at period end will either be identified by default or by the account entered on the line, or, for example, you have the option to manually check the line for elimination. When you run intercompany elimination for a period, NetSuite creates an elimination journal entry for all intercompany transaction journal lines that have this elimination box checked. Adjustments that result from the difference in the foreign currency exchange rate for these original intercompany journal entries and the elimination journal entry post to the accumulated translation adjustment elimination account. NetSuite will also create a reversing journal entry for all intercompany journal lines that post to the intercompany receivables and intercompany payables. So intercompany journal entries in NetSuite, these are a specialized type of journal entry available specifically for OneWorld accounts, where each intercompany journal is posted for a transaction between two different subsidiaries. When you create an intercompany journal entry, you will select the originating subsidiary in the subsidiary field and the receiving subsidiary in the to subsidiary field. And so choices in the account fields are limited to those associated with the chosen subsidiary. Excuse me, sorry. The currency field will display the base currency of the originating currency, but it can be changed to the base currency of the receiving subsidiary. And when you save the journal entry, the ledger of each subsidiary will be appropriately debited and credited. So if we jump back into NetSuite, and I can show you this. So what I'll first show is, if I go back to my home page, so within my subsidiary setup, I have different elimination members at each level. So I've got elimination sub at the level of Americas, or what looks like the group level here. And then I've got this one here for EMA. So within my European region, I have an X elimination for EMEA. And I can see here, as before, everything data gets refreshed to that of this specific elimination subsidiary. So, and as before, I can jump through and actually see records that are associated to that. So I can jump through to here, and I can see that 3 journals were made to this subsidiary. And if I click on this one here, I can see I'll have a journal that was made specifically to my European elimination subsidiary member. Let's jump back. And if I show this one, I can see here that a memo has been put in. So this journal has been created because it needs to record the June intercompany eliminations. And this would have been something that would have been manually put in, a journal created, and the data has gone against this X elimination subsidiary. And then the final thing I want to show is an example of one of these intercompany elimination, as I mentioned before, intercompany journal entries. So if I just search for my journal, which would be sorry, journal 276, here we go. Oh, so one thing to note with get caught out of this before is that if you click on the subsidiary navigator, if you click on one of the subsidiaries, then everything you try and view inside of NetSuite will be related specifically to that subsidiary. So it just said I didn't have permission. I was trying to look at a record that looked at different different subsidiaries. So I need to go back to my Nelson Holdings one, and I now have the ability to view my journal 276. So this is an intercompany journal, and you can see here I've set up the classification. This is from my German subsidiary and my UK subsidiary, and here you can see I've entered my debit and credit amounts against different accounts and different subsidiaries. So this is just a quick example of an intercompany journal that has been entered into the system, and this is obviously something that's only available to NetSuite OneWorld accounts. Okay. So that was the final thing I wanted to show. I'll end with any questions that you may have, and thank you for your time listening and watching my this webinar. If you've got any questions now, please send them through. If not, and you come back afterwards and you have any questions, please email them to sales@nolanbusinesssolutions.com. I'll stay on the line for a couple of minutes if there's any questions. If not, thank you very much, and I hope you have a good rest of your afternoon.